Shifting our focus now, a terse order from Beijing has just scuppered a $2 billion deal by Mark Zuckerberg. China has told Meta to walk away from Manus, which is one of the hottest Chinese AI startups. The message is bigger than one acquisition. Beijing is telling every AI founder in China that you can build here, but you can never leave. Remember, Manus made global headlines last year for its AI agent model that can browse the web, book flights, write codes, a digital employee as it were. It was built in Beijing in 2022 by a parent company called Butterfly Effect. In mid-2025, like many Chinese tech entrepreneurs, the founders quietly moved headquarters to Singapore and rebranded. In December, Meta announced it was buying Manus for around $2 billion. For Beijing, that was the line. Late last month, China's top economic planner, the NDRC, issued a 54-character order that prohibited foreign investment in Manus. The deal unraveled. The NDRC did not even name Meta. It didn't have to. Within days, Beijing went further and told its biggest AI players that they cannot accept American money without explicit government approval. As Bloomberg put it, the Manus model of Chinese founders building at home and cashing out abroad is, quote, officially dead. Beijing's logic is sweeping. Any AI built on Chinese soil by Chinese engineers is a Chinese national asset, irrespective of where the company is later registered. This will have global repercussions in Washington. Hawks are likely to demand against Chinese capital, in fact, chasing American AI. Brussels has spent 2 years drafting AI sovereignty rules. In May 2025, Japan widened its Foreign Exchange and Foreign Trade Act to bring more AI and semiconductor companies under mandatory pre-closing security screening. Since January last year, any Korean company holding government-funded AI tech needs ministry approval to seek foreign funding. AI is no longer a normal industry. It is being treated almost like nuclear capability. And remember, India is not in this fight as a builder, at least not yet. With 958 million active internet users, over 100 million weekly on ChatGPT alone, India is one of the largest markets in the world that every AI company wants a piece of. But if this fight hardens, the AI tools Indians get might not be the best one, and the one that's allowed in geopolitically. Manus could have been a global product. It is stranded in Beijing now. Tomorrow, an American model could be next. There is a sharper warning for New Delhi. India is funding its own AI champions through the India AI mission. Hundreds of Indian founders have moved to the Silicon Valley chasing capital. If one of them builds the next Manus and big tech offers billions, then does India have a Manus moment ready? The pertinent question is, who owns AI built on Indian soil? China's move may backfire. By treating founders like state assets, Beijing is recreating the very environment that drove them to Singapore in the first place. The real loser will not be Meta. It will be the next generation of Chinese AI entrepreneurs who now know the state, not the market, decides who buys them. For India, the lesson isn't to copy Beijing. It is to draft its own comprehensive AI rules so it doesn't have to end up living by someone else's.